All right. Can you see my screen? Okay. Just a basic agenda of what we're going to talk about, sort of a background of where I've come from and how I've gotten here, some Python libraries that we're going to discuss that were used. We'll look at a demo of the code in action. And then for those that want to stick around, we'll go more in depth on the code overview. And then for those that really stick around late, we'll look at using the code in ThinkOrSwim in a more magnified kind of a way. So just as background, I've been coding for a long time, and I've worked in various industries, as they mentioned, but there's been some consistent patterns. I've always been interested in AI and specifically ethics in AI and more towards how we get a conscience in these systems. We have like 5,000 robots on the battlefield, and they won't differentiate between one target versus another based on what they're told. So versus a human will. And so I'm always interested in that topic. And so I'm glad to see in recent times that like our day-to-day ethics in AI is coming into discussion a lot more. But turning code into a database and doing complex SQL queries is an interesting approach of something I like to do. And then you can take code and transform it into English blocks for your subject matter experts to review, or generating mass test data from your code. So that's been an interesting a thing of interest of mine. And then through the years, I've done time series analysis. When I was in college, I did baby heart monitors at LSU Medical Center. And so finding the beginning and ending of a heartbeat was an early challenge. We used first derivative on that. And then oil wells in Bakersfield, California, finding the oil wells that could best get return on investment with a limited team. And then we get a lot of automation logs from our robotic process automation systems. So finding the beginning and ending of an event there. And so then I've taken, sorry for the block here, but basically Python and looking at stock trading data and finding the beginning and ending of events is a big interest to me. So that's to a large degree how I got here. So we'll talk about libraries, and I just love this particular thing that, we have all these libraries that we depend on, and we hope that they all work well, and we count on it. But Python seems to have some great stuff. And so we'll talk about some of my favorites here with Pandas. Pandas is basically like giving you a very powerful spreadsheet. You can insert columns and rows very easily and transform data. We'll see how I take a basic daily set of data and aggregate it into weekly and monthly data to use it. We'll go over this website here in just a second to show you some of the cool stuff that Plotly can do. Numpy is very important in Python. A lot of calculations are done with that. So moving averages and more advanced calculations get done via Numpy. Then Plotly is one of the different possible graphics layers that can be used. There's another one called Mathlib, and it's a bit more powerful, but it's a lot more responsibility. So the nice thing about Plotly is it's a really great set of wrappers so that you don't have to do that much. You basically just define what it is you want done, and it does the work for you. And then finally, we'll sort of touch on requests, which allows you to make web calls, web API calls, in this case, out to TD Ameritrade to go get live data. Any questions on the libraries? We'll get into more detail as we go. Oh, by the way, I'm happy to take questions as we go. I can't see any chat, but if you can verbally ask it, and otherwise we'll take chat at the end of it. So I'll do a demo. This is basically going to be what we're going to calculate here. This is going to be, I'll kick up Dow Jones. This is QQQ right now, but we'll kick up Dow Jones, and you're looking at the candlestick data. Here, let me just go ahead and bring it up.
What's candlestick?
I'll show you in just a second.
Okay.
I had to change my screen resolution size, so things are a little smaller, but hopefully it'll be easier for you guys to see. Okay, so it's loading up in the background. It's making live data calls to TD Ameritrade to go get the data. Then it's calculating. So this is basically the same thing, but it's live. And okay, so candlesticks. One of the things that I like about this is being able to block your legend into blocks. And so you can see, well, I'll tell you what, let me take everything off for a second. This is just Fibonacci, by the way, from the low to the high. There's a natural progression of Fibonacci that I like to watch. Candlestick data, instead of just being the closing information, it shows you the opening price, the closing price, the low, and the high. So, for example, if we go look at this particular value right here, the low for the day was down here, even though the open started here, the close finished here, this was its high and this was its low. Does that make more sense? So it's a bit more rich in terms of the information that's presented. And so the name of this is called candlestick. And I'll be back at it. There's a lot of features. I've got a small screen. Hang on just a second. Here's how. Okay. So we have the basic candlestick data that we load in. I'll show you how that's done. And then we do some price analysis. So basically, if you started with $10,000 at the beginning of the year, where would you end up? And just basic price on the Dow Jones itself would be up to, you'd be up $800. But then I'm going to look at some particular calculations, one that I really like quite a bit called the Parabolic Stop and Replace, or Stop and Reverse, so PSAR. And so similarly then, if you started with the same $10,000, you would be up to $13,000. So basically a 30% increase by using the PSAR in this theoretical environment. And then the other thing is to take that same PSAR and instead of aggregating at a daily level, to aggregate the data again at a weekly level, and then aggregate it even further at a monthly level. And you can then look at how those do. The weekly and monthly do not gather as much income as the tracking the daily PSARs do. I've colored the red PSARs that are descending and the green ones that are ascending because it sort of makes more intuitive sense. The weekly and monthly are the same color. So does that make basic? I've got prediction. Everything past the dotted line is a prediction. I predict it into the next 3 days using first and second derivative. Any basic questions on what we're looking at here? I'll be glad to answer.
What's the blue line again? The
Fibonacci. And so if you look in nature, okay, Leonardo da Vinci's man that has all the rectangles on it, those are called the golden ratio, and they appear in nature all the time. A nautilus shell, each section of a nautilus shell is 1.61 larger than the next. And so that is the natural logarithm, or the Fibonacci sequence. And we find that humans trade in the Fibonacci sequence as well. It can be useful for predicting where the humans are going to go. And so even though this is from, I simply calculate from the minimum data presented to the maximum data presented, you'll notice that magically we came in at this point right up here, right? I didn't predict that. That's just humans behaving in this predictable way. So I have friends that are traders that trade based on Fibonacci, and they can predict once they don't know if it's going to move up or down, but once it moves, then they can place their bet based on knowing where it's going to go to. And I'm doing something using.
I was asking about the blue line and the purple one.
Oh,
like the curve, a blue curve, like it's
down here. Sorry, different blue line. Oh, are these blue lines?
Yeah.
Okay, so these are the parabolic stop and replace. And basically what's going on is that it takes the range. Look at this event here, this big blue event here. The minimum, the extreme point is down here. So when it flips, when the data comes up and touches it, then it's going to flip down to this extreme point here. And it'll go along, it'll remember the most extreme point in this case, which is at the top. And so when it flips, then it flips to right here. And then when the data touches again, it flips to the extreme, which is this gentleman in like 1976. Oh gosh, his initials are WW Jr. Wallace, something like that. I haven't memorized it yet. He invented this beautiful little formula called the parabolic stop and replace. So it basically, when the data touches the predicted value, it flips to the other side, to the other extreme point. And then as long as the data is going normally, it's increasing at 2%. But if it begins to accelerate, it will accelerate to 2%, 4%, 6%, et cetera, until it reaches a maximum of 20% maximum. And so that's how it automatically builds these trend lines. So this defines an event for me. This is the beginning of the event and the ending of the event. And this is automatically generated. I don't have to go in and hand draw any trend lines. This is automatically calculated. And based on what I've seen of watching the market on a regular basis, I think it's being heavily used by other traders because the data moves exactly with the PSAR at a lot of times. So anyway, did I answer your question?
Somewhat. Thank you.
Okay. All right, we'll dig in more into this. I guess I'll leave that up. Oh, so let me just highlight some Plotly. All I had to do was basically put the data in here. This selecting of data, Plotly does for me, and I can shift over to a more detailed form. And you can get every pixel on the screen. I'm not doing any of that. I defined what would be presented, but the actual presentation is being done by the Plotly library. And as I showed you, you can zoom in over a given range, and I didn't have to code that. It does it. The other thing is it has this slider then, and so then you can slide the data. Basically what I've done is I've created 3 graphs, this upper graph here, this middle graph here, and this third graph here in one column. You could have more than one column. And then I attached the slider to this one, so it presents the same information as that slider. But I didn't have to write any code for that. I just defined, I defined like one line of code for each of those features. So it's very nice. Anything else? You can change over to the drag mode, so you can just drag it like this to investigate your data. So it makes for really useful analysis of any data that you have. And then, like I said, I like being able to turn these blocks on and off. Initially, I had to make 24 individual clicks to get stuff turned off, and now I can do it in big blocks. And I'll show you how you can do that with legends. Okay. So let me shift back over to the presentation. At a high level, the code has a main block that will call the loading of the data, and then that calls out to the API to call TD Ameritrade to go get it. I can also load from CSV if I want to, in this particular case, for testing, etc. Then we're going to analyze the data. We'll calculate moving averages. We'll calculate the Bollinger Bands. Oh, I guess I didn't talk about Bollinger too much. You can see this yellow line here. It is basically one standard deviation plotted at the moving average, and that's called the Bollinger Band. And so it tends to stay within 2 standard deviations. I like 1 standard deviation to show me. You can often see when it's below it, let it go, and when it comes back in, buy. And then once it goes above it, let it go, and then when it comes back in, sell, is the basic essence of a Bollinger Band. And you'll notice that that event tends to happen right around the same time as the PSAR flips. So then the calculation of the parabolic stop and replace. Then I've got the basic trading strategies to implement the parabolic stop and replace, and that calculates this line down here of how are you doing versus price. And basically, if you're in cash, it's up here, and if you're in stock, it's down below. And then you're back. So you get in and get. So in the red lines, you've basically gotten out and you're in cash, and in the green lines, you bought stock again and you're basically staying in. So that's what we're seeing. Let me back out to home. Yes. Yes, and so I'm in a read-only format. What you do is you go to a website and you register with your login ID and password, and they hand you back a key, and then you put that key in your code, and you use that key when you make API calls, and then you can use a more advanced key, and you can actually get access to your economic information, and you can make trades. But those are only authorized for about anywhere from 30 seconds to 30 minutes, depending on how you allocate it, and then you have to read the key. We get time, I'll show you what that cool REST API is that they have. So anyway, that's the trading strategies, and then we take all that data that we gathered together and we present it on the graph. And then I created graph helpers that basically make the code shorter. I've refactored it. Repetitive code gets called it in here. Okay, so here we are in the main right here. And we basically make our different imports. These are my particular sub-routines Python files, so there's not too much going on right here. I can configure. Obviously, what would be better at some point is to have a user interface. I just haven't gotten to that point. I'm probably going to use Qt so that I can then but I can basically comment code in and out to change our tickers that we look at. And then your different time periods, if you want to look at it, yearly, daily, by the minute, etc. So then we're going to call load data. And a thing that I like about Python is you can pass back more than one argument. Unlike other languages that you can only pass back one argument, you can get back more than one. So I pass back out my basic data frame, which is the spreadsheet of information that I got from TD Ameritrade. And also then separately, I made a call and got today's stock quote so that I can then merge those two pieces of information together. But you pass in the period type, etc., as you call. I'm guessing everybody is used to this, but I do definitely like this feature in Python that I can go ahead and set up default values for my input arguments. And so you don't have to, by default, it's going to do a TD Ameritrade 1 year daily information, etc. But you don't, then you can override it with particular calls. And so a little safety check, if data was returned, then we do the rest of this. If it's not, then I'll skip it. Obviously, better error handling needs to be done, but I've been at this for just a couple of months. I haven't done all that detail yet. And so then you call analyze data, passing in that stock ticker that we got, the data frame that we got, and the period type, and it'll pass back out a Pandas daily calculation, and it then also aggregates that together into weekly, monthly, daily, and then it calculates the trends, the daily trends, weekly trends, monthly trends. So let's go look at that for a minute at a high level. So these are data frames. We did import Pandas. Why didn't that not get? Sorry, it's been a while since I've looked at a couple of these pieces of code. We are using Pandas in here, these data frames. I think it sort of can figure out for itself that it's a data frame. One of the nice things that I do, if I load a CSV, there's a bunch of junk in it. There's dollar signs and some extra spaces and such as that. So I can basically recognize the fact that I've got it and then go clean up my data and get it prepared. Then we can go ahead and calculate our basic information. So I can calculate a column in the data frame that I call moving average 5. And so then I do a rolling mean of 5 data points. And then I do the same thing for a 14-point moving average. And then I call my Bollinger Band calculation, which there's not a lot to that. Again, it's similar rolling means. And then you calculate the standard deviation, and you plot that above the mean and below the mean, plus and minus. And so those are your upper bands and lower bands above the mean. So that's simply what's in the Bollinger Band. Get back to where we were. That is the new column that I'm creating. And so the Pandas allows me to, I calculate it and then I'm actually creating a new column. And what's nice about Python is there's no for loop here. The for loop is implicit. It goes across all of the data of data frame doing the rolling mean, which passes back a whole list in this case. And then you take that list and apply it. I think it's a list. It might be a dictionary. I'm not sure. I think it's a list.
It's a series.
Series? Okay, thank you.
Data from series, probably, most probably.
Okay. Of course, the good news is we could drill into mean and we could go see what it returns, et cetera, and then we have the exact answer. But I'm going to go look at a cursory level at this PSAR. We can come back later if we want to, but it's not too bad. I'm just going to point out it's basically about 100 lines of code to go do it. And you set up some basic lists and seed the initial values at your starting point. And then you're going to create your trend. This calls the subfunction PSAR trend data, passing in all the current values. These are initial values, but then they get modified. And so that comes down here into this subfunction PSAR data inspection. Anyway, we could drill into more details of how that gets accomplished, but it's not that difficult. It serves a whole lot easier than other languages, I think. I really am enjoying getting to work with Python on it. So it basically walks that list and calculates those PSAR values at the level that it's at. But I guess what I did want to show you too was then we calculate this for the daily information. And there's another graph down below called the MACD that needs the 12 and 26 day moving average and creates another calculation. This is a nice dictionary that's going to be used as the logic parameter that we're going to pass in. Basically what it's going to say is, as we aggregate the weekly data, the candlestick for the date column is going to use the last value that you find. The open value will be the first value. The high will be the maximum value. The low will be the minimum value. The close will be the last value as well. And then the volume will be the sum of the volume information. So this is how you're going to aggregate the information as we go along. And this is just a date timestamp that I use for timestamping just to see how long the code's taking. And so this is a very powerful statement right here, the resample. And it did get redone. I upgraded Pandas last week and had a shock. They deprecated the old way, so I had to modify it some here. But anyway, it still remained quite powerful. And we basically aggregate this on a weekly information, and you apply that logic parameter that we set up, and so that tells it how it's going to aggregate it. I then go ahead and modify, instead of being a daily index at that point, it needs to get the correct offset, and we calculate the index of the weekly information. Once that's ready, now I can calculate my core 14-day moving average, and then I can call the same PSAR calculation, but this time we pass in the weekly data frame instead of the daily data frame. And it then passes out the weekly information that I'm going to need. And then we repeat that process again at the month level. So, once you've got it set up, then it's very easy. And really what needs to happen at some point is I'm going to create a dictionary of types so that I can do more than weekly, monthly, I could do yearly, quarterly, etc., and also then down at the mid level. So basically calling this passing in the different arguments because most everything else is the same, but that way I'll come back with a list of data frames, which would be a better way to do it instead of the hard-coded way that I have it right now. Any questions on that? I know that's complicated, but it's really wonderful, this resample function right here. Okay, so then I go ahead and set up a area that I'm going to write out my CSVs so that I can do later analysis, and they show up here in my results. Not sure this is the best place to put it, but this is what I'm doing. I have dynamically create my results that I can go analyze.
So we're going to hop in real quick. It looks like we have a question from Matthew.
Okay.
He wants to know, were there any interesting subtleties in the definitions that you discovered during your work? For example, stock quote at open and close versus after hours trading.
Yes. There's a lot of change in behavior that more comes from actually doing it on a regular basis. If you stick around later on the scene, we'll go through ThinkScript and ThinkOrSwim and see it. But yes, there's some radical behavioral changes that shift from 3 a.m. is the start of the day for industrial, and then most of us can kick in at 6 a.m. and then the regular population can kick in at 8:30. There's a big wall of change right there. I noticed also that around lunchtime at noon and 1 p.m., different time zones, there'll be a shift, and then 3 p.m., everybody sets up and sort of hands it over in detail. Yes, is the short answer, sorry. So yeah, we'll go look at that. So I do some timestamp information for my own purposes to see how long it took to calculate, and so it produces output on the console like this, which is helpful to let me know how long the calculations are taking, and then you return all the information that you've calculated. So this is basically an amalgamation of a bunch of different websites that I pieced together, and it worked out quite happily. So we've gone through the, actually we probably ought to look at the loading just a little bit. I want to show you how cool the TD Ameritrade was. Let's not spend too long on it. So if I load in CSV, then I can just go load hard-coded CSV files. But otherwise, with TD Ameritrade, then I go call my TD Ameritrade block, and it's prepared to do several different things. So you can do a stock quote, you can get a historical price, and all you're basically doing is you're forming a URL that is going to have the information that you need. Get this right here. Oh, actually, there's one more specific in there. So we're going to use the price history. This is the one that there we go. All we basically have to do is set up the URL that we're going to use and format it. And then you make the, as I said, we made the request. We did an import up here of requests and pandas in CSV. Oh, by the way, here is the example of the with statement that Chris had talked about, right? We did file path and a with open, and then it does the readers and the fors, and about to close, it took care of it for me. So we've gone and set up our URL. We make a request and we pass that URL, and then I have my API key with my consumer, and that authorizes me so that it then, and so for example, if you abuse your privileges, you only get like, 1,000 transactions per day, and if you go over that, then they'll lock your particular key. Now you personally can have multiple keys. You can set it up for each application that you have, but I just load that from a CSV file, and that way me and my two other buddies that we work together on this, we use the same code, but we personally have different keys that we're using to access our personal data separately. So you get the result back, and it's in JSON format, so you reformat it into JSON, and then based on the information I got back, if it is the price history versus the stock quote, I sort of format it differently. And so we do the candles conversion. We go get the candles JSON information that's in it and then pass it back in the data frame. So the stock quote is in a different format, and so either way I pass my information back out. So that's roughly how, and I mean, so I'm pleased that with very little effort, I mean, just with a few lines of code, you set up your URL, you make your request, and then you reformat it, and boom, you're good to go in your data frame. So I'm going to show you real quick what that looks like. Ameritrade provides this, and so you're basically building a URL, and then you can set your information, your units, and this might work. I think I'd have to go get my, yeah, I didn't get my authorization code, but if you did it, you'd actually get real results, so you can test your output, which is a nice way to do this. There are other tools out there that will test request systems, but this is specifically geared for the TD Ameritrade request information, and so it makes it a lot easier for doing that. Okay, so we've gone through the load data and the analyze data. I think I'm going to skip the trading techniques in the name of time. We'll come back to that later. It basically is just taking that and plot, saying if you had $10,000 and you put it in and take it out, what would you end up with? And so it produces the daily, weekly, monthly information, or updates that information so that then the scatter plot can do it. So this is what we really were getting here to do. And so now we begin using the Plotly as graph, and we're going to create a figure. And so I tell it that I'm going to have 3 rows of graphs and 1 column, and then this is the spacing between it. So that sets up our 1, 2, 3 graphs. This extra slider is not counted as one of those, and then 1 column of it. This is how using this make subplots command is what lets you define that. Then we get the basic data. We create the candlesticks using the open, high, low, close information out of the data frame. And then we add a trace line of that. And so that simply creates the candlestick data. Back us down. So we'd had that much with that command right there. Now we, for example, go create the Bollinger Bands. I created a wrapper function. It basically just takes all of these arguments in. If I'm going to do a straight line, it's one set of arguments, and otherwise with the spline, it's going to do a different one, and basically sets it up. So instead of having to have all that for every call, I can have a nice one-liner. And so then I tag it with the label that it's going to have. The x-axis is going to be the date. The y-axis is different information. In this case, the Bollinger Band upper band, the Bollinger Band lower, the color that's going to be used. And then we have whether the legend is going to be shown. And here's the cool trick that I like, which is a legend group. So I have the daily group, and then I have a weekly group. There we go. Somebody help me see, where did I put legend group? Use it down here someplace. Here's legend group daily, legend group weekly, legend group monthly. And so that was a cool trick that let it be allocated in blocks. So basically I can go add all the information with one line, providing the x-axis and y-axis information data. So here's all the information that it takes to produce the first graph. Here's what it takes to produce the second graph, which is the MACD, with its 2 lines, the MACD and the signal. And then the third graph, which is the price, the funds, and the weekly funds represent there. Then we start sort of customizing some things. If we didn't remove the weekends, there would be some gaps in the data for Saturday and Sunday. So by using we set up a dictionary of arguments and pass that in using the range breaks command to Plotly, and update the x-axis, and that makes a nice, smooth-looking graph. This adds the legends and where it's going to go. Then we can put the titles of the x-axis information on the left side. And then we add the slider buttons, which are the 1 month, 6 month, year-to-date, 1 year button that we saw, so that you can go in and change just year to day, etc. versus all. You set up your range slider. And I turn off this. By default, it would have range sliders on all 3 graphs. So I basically turn it off for the other graphs so that we only have 1 range slider, but it controls all the graphs at once. Then I call my Fibonacci command that calculates the Fibonacci values and creates square lines in the background there. Really straightforward. Oh, and I like this too. This is the creating the table data right here in the console. So with very little effort, I used the graph time. Maybe that's where I put it. Fibonacci. Tabulate. Okay, it's the tabulate library that creates this nice table for me. so that I can double check my values. And then I do an add shape with those dimensions, and that's what adds the different colors. So that's how those are added to the background. So I think that is basically what we wanted to look at. All of this is being done, we're adding to the figure with each call, right? So the same figure, and so it hasn't been presented yet, but everything has gotten prepared. And the simple way is if you just did a fig show, it would present that information in a web browser. I tried to get a little bit more advanced, and so I take that information and write it to a file, and then we call a Qt function, which takes that file, uses Qt5 and Plotly offline, and then it basically puts it in a frame for us that's an independent frame instead of a web browser that it shows, and then when we're done, we exit the code. So I was just using the fig.show to begin with, but I added more to it so that I could have an independent application now that is not a web browser. And where I'm trying to head then with this is I'll have a left outline control that's like various stocks to pick from, and as you click from it, then this frame would update, changing it over time. So this is my incremental path towards that goal. Okay, so I think that's at a high level all the things that we did. Let's go back to main just to make sure. Right. If we get time later on, I've got a 3D surface cool demo. Oh, sorry, one other thing I wanted to show you. This is the Plotly website, plotly.com/Python. So here are examples of all the cool type of visualizations that Plotly will do. And beneath each one, they give actual working code, which in many cases is not a lot of code to do nice graphs like this. This is actual running code. This stuff is running over here to do a spectrum of different types of graphs that you may want to do. This is free for development. If you deliver in a commercial context, then they have licensing fees to do that. I really like, for multidimensional analysis for AI systems, this is an excellent type of graph that I really like to use. Here's other examples of it. So basically for each dimension you have a column, and if you look at one particular data point, it is that particular, and so you can see visual trends in your multidimensional data. Okay.
You made mention of ThinkOrSwim. What exactly is that?
It is a stock trading program. I'll do a quick. This is the code. This is Tesla. This is that same PSAR that I calculated, but instead of doing, and I'm out at the daily level, let me zoom into the minute level. Probably a little too close. Let me back out to 15 minutes. So it lets me, you can see these repeating patterns. These are the same PSAR values, but at the minute, 5 minute, 15 minute, 30 minute, hour, day, week, month, etc. And you can just begin to see this repeating pattern that sort of looks like a bird beak on the side. Here it is again. Here it is again. And you can begin to predict based on it. You know that when it completes, it's going to be headed up. When it completes, it's going to be headed up. When it completes, it's going to be, now, there's actually a reverse underneath it that's a little bit harder to see because Tesla is headed up. Other things like the Dow that are equal, you'll see basically the same thing in reverse. And it's nice that you can pay attention to a particular graph and look at how it impacts the data and affects it, but you can see these repeating patterns. So it's fairly straightforward, and then I'll be done.
If you want to do well, I recommend Wall Street bets. Even Kramer backs them.
Okay, they do analysis for us in this way?
Oh yeah, yeah. They really like Tesla. They also really like Palantir. Yeah.
Well, I think everybody likes Tesla. So,
I think you
I've
hit
been
on
Tesla
something
since
earlier.
2016, which is not too long ago. But this is ThinkScript, which is very Pythonish. And the trick is instead of the normal PSAR, I pass in the particular time scale that I want to do. And instead of doing the normal high value, I aggregate it. So it's like doing the data frame reframe is the equivalent of what is going on here. And that allows me then to call it. It doesn't do loops very well. So I had to hard code minute, 5 minute, etc. But that's how I then produce that graph. And so this lets me write my own code and see it during the day as I trade. I did the same thing with the TTM squeeze down here too. So that roughly answered your question as to what ThinkOrSwim is.
Yeah, absolutely. I think you hit on earlier that a lot of people are starting to utilize these tools. Everything from Alpaca to, I think, EIC. They all have API, REST API calls that you can make to do anything and everything, which kind of gets me worried because you made mention that a lot of it seems to be tracking the same way.
Yes.
When you looked at
It
the
is
March
self-feeding.
timeframe, did you see anything when it crashed? When February, March, did you see anything like broke everything, or did it actually follow suit perfectly?
Everybody crashed at the same time, right? You know, everybody had the COVID effect. This is in the year, right? And all right, let's turn it on.
Wait, long-term treasuries did well then, right?
Sorry?
Long-term treasuries did well during that dip, right?
Everybody shifted over to the long-term treasuries? Yeah.
No, the long-term treasuries rallied when everything else went down.
Right. Everybody shifted from stocks over to them, right?
Yeah.
So what you'll see is, for example, it gives you the warning right here. As the data touches it, it basically says it's time to get out. There's the flip right here. So based on that, and my friend who is a day trader did choose himself personally. He doesn't use this, but he got out on February 28th. So this was his last day that he could tolerate. But using the PSAR, you can actually get the warning back here. And so then the same thing. And do we see the Bollinger? Wait, not the Bollinger. There we go. Here's the Bollinger right here. And so when it comes back in the Bollinger, then that's your clue to get back in. The basic thing that I've observed is that when the bigger PSAR is descending, let me say it backwards. When the bigger PSAR is ascending, just buy long and hold. Trying to trade in here, you're not going to do nearly as well as price. But then when it is descending, it gives permission, the weekly descending gives permission to go trade the daily PSAR. And so where the weekly would be out for the whole thing, instead you get in here at the daily. So that's a personal pattern that I've seen. And it follows true if you get down into the hourly, 15-minute, 5-minute, 1 minute, it's true. If the bigger one is down, then trade the inner one. If the bigger one is up, trade it. And anyway, but that's, you know, you can go do your own time series analysis. And what I like is beyond stock data, you could use something else to, again, instead of hand identifying trends, it does it for you as well. And it's parabolic in terms of it will accelerate. It basically is like the sand grains in a timer, and you turn it upside down and the grains begin to tick, tick. If the data doesn't move, it's still going to collide with it at some point. It will accelerate towards it until it finally, now as long as the data continues to accelerate, then it'll hold out. But here's a case where it did not, and so it quickly flipped.
Is PSAR popular enough that it's moving the market?
Well, I think that most of the market is using the PSAR. Either we humans are really in tune with the PSAR, or I think that I think a lot of algorithmic traders are using it. It's been out since 1976, I think, and or 90 years. We can Google it. Let's just do that real quick. And there we go, Wells Wilder Jr. And history. Oh, there's a book that he wrote. I'm not sure where. Wells Wilder, New Concepts in Technical Trading Systems. There we go. It was new in the year.
It looked like 1979.
There we go, 1978. So, all right.
Is the lag really important when you're making these trading decisions? It's like, is there competition between all the technical traders on who has the shortest lag so they can get their trade in based on some of these common signals?
Generally, you know, if you had the ability to predict the future, which is sort of what this is, these first 3 days here are my first and second derivative prediction, which needs to get more sophisticated, but it's where I'm headed. This vertical line is today, and everything else here is prediction. When you can predict that these two lines are going to intersect, then what you want to do is trade today, not tomorrow. Because what happens is the PSAR flips on the day it touches where the PSAR would have been, and it would have been better, you'd make more money if you traded on the day before, not the day that it actually flips. So to some degree, that's your lag, but you need to predict the future and be right. And I have found personally trading that you think that it's going to do that, and then it doesn't. You know, basically, it should go up, but it doesn't always, right? And I don't have an answer to that one yet. But my friend Paul says that I will never find that prediction yet, but I'm trying. You know, we'll see. Everybody out panning for gold. Well, and see, what I need to do is I've done this. What I've noticed is that if it is interesting data like this that is up and down, it does very well. If it's solid up, then the price would have done better. And so that's, again, how I come up with this rule. And I need to, what I've not done yet in my calculations is do what I verbally said, which is use the bigger one to determine, and when it goes down, then shift to the smaller one. And I haven't done that yet. And when I do, then I'm going to put that here in my back testing to see if that does better. My theory is that it'll do better over time.
Do you trade on order flow, or do you trade on actual transactions?
I'm manually trading right now. I have not let this thing loose to do any automatic trading yet. My friend and I are working on a system that would. He had a successful trading system that was traded at the end of the day for about 15 years, and but it became outdated. You know, Microsoft Windows, and it's just even the hardware. So we're upgrading to Python, and I didn't quite answer your question. Can you ask it again?
Yeah. Do you trade on order flow as opposed to actual transactions? Order flow is, right? I'm trying to introduce the idea of order flow in a question. I
guess, you know, I don't know. Why don't you explain what order flow is to me?
Order flow is when there's a pool of stock out there, and you put out a call to buy something at a particular value or sell at a particular value, and
limit.
Yeah, well, at a limit, with a limit, but there's sometimes a mismatch between what's actually being sold at and what you're proposing, and that's how a lot of brokerages make their money, is in that difference. So, you know, it's usually pennies, a penny or two, sometimes. I've only seen it in 1 or 2 pennies, but
in the gap between the ask and the bid price.
Yeah.
Right. Well, so when I go to make a trade, I can, for example, set up a buy, and can I move this out of the way? There we go. I'll always go edit. I'm at the smaller screen resolution, and I'm used to having more screen. Hang on, let me try again. Well, that's unfortunate. I don't have enough screen resolution to show you, but basically, I will go in and set the number of shares that I'm going to do. And there's a little lock that they have. It goes in by default. It's locked at the price that if whatever I right click on and hit buy, it'll put it at that price. But if I hit the unlock, then it's going to use the buy or ask so that when I hit the go button, it pretty much always executes because I'm shifting in their direction. Now that could be dangerous if things are highly dynamic, but you can lock it at a certain limit price, but you can, if the bid is at $800, and you want to sell, then by selling at the bid price, you're guaranteed to get it. Even though your other fellow people that are asking will probably be asking at a higher price, you're willing to go to what's being bid, and so it'll execute on the spot. So that's how, I'm sure the other trading systems work similarly, but that makes it easy for me. I can sort of guarantee that it's going to go through. If I don't, if I forget and leave that thing locked, then it may sit there and I may have missed the window. It'll move on, and I have to basically cancel that and reorder at a different price. Did that answer your question?
A little. It brings in the other risk of trading sometimes, which is if you put a limit order and it's a simple limit order. I think usually I see it because I don't get into this kind of thing. Maybe I'll trade once a day at best. You know, like if you put in a limit order to try to stopgap your loss at 200 and it's in effect for 2 days, and if you don't get to trade outside of regular market hours and the stock takes a dive after market, you can suddenly pop in at such a low value, even well below your limit.
Right. And so that's, you hopefully went in long and held. I made a lot of my money that way because, you know, I bought stock back in 2016. But even as recently as November, I bought and held for the month of November, which was a profitable move. But since then, I've been trying to get in at another point, and I'm just too skittish. Where are we right now? Let me go out to day. Right, and back up. What is it? Oh, I got to get bigger data. Right. So, you know, I was able to buy and hold, and even though and I have other friends who are millionaires that trade, and the point is you basically buy and it will always drop right after it, and you've got to have the courage to endure that. But as long as you do, then it will go on back up if you've done it right. And anyway, so that's the buy and hold, and then you don't have to worry about it. All you have to worry about is if you bought in here, at what point is it going to drop to the point, you know, that you've lost, you know, I see this tells me that in another day or so, it's going to drop, but I've been saying that for a while. The other thing, the purple tells me that it's above the moving average, and so it sort of expires when it turns purple. It won't make it more past than about 8 usually. So that's my warning that it's coming. But, you know, I've been saying that for a long time and it hasn't happened. So, you know, we got this even bigger one here. So the point is, if you bought in here, you know, at what point do you want to sell versus ride it all the way back down and then you've lost your profit, right? So I didn't want to get, hopefully we've covered anybody that wanted to cover Python and code, but we can do a mix of those questions, et cetera. So.
Hey, Alan, real quick. I just want to know, do you work with any like correlations with the VIX within your data?
What's a VIX? I'm sorry.
The VIX, VIX.
What is VIX? I don't know.
It's like a ticker to kind of measure like fear in the market.
The CBOE, yeah.
Nope, haven't heard of it.
Yeah, check it out. VIX. It kind of gives you an idea of like fear in the market. I mean, it's kind of correlated for the most part, but it might be something interesting to throw in there.
There is a fear thing that I found the other day. Some who is this that does this? Oh, CNN.com has a really. It was more like 50 the last time I looked. This might be in the direction you're going.
No, it's more of related to the put and the calls on the options and how disparate they are between each other. That kind of tells people.
This sounds like something different.
Yeah, the CBOE. Look that up.
That is it. That's it.
Yeah, it's kind of interesting.
You got to do it over a longer period than a day. Do it year to date, or yeah, year. That's great. So you can see in March where it peaked, and then it came down. It's very hand wavy. It's more qualitative, less quantitative than you'd like it to be. But
Here is an explanation over here for us. Yeah. Okay. Thank you. Volatility index. Okay. So I mean, it's great with the Python that you can just do, you know, a lot of what you want to do, and you know, and without too much effort, you can actually go make the trades if you wanted to, you know, get yourself out of the loop. We are not there yet, but anyway, this has been very helpful for me. I really do think that I'm going to be able to use this kind of technique in other time series analysis, and you know, I'm wanting to bring in TensorFlow on top of this. I've been looking at some other things of TensorFlow and stock trading, etc. But that's more to, again, this has taught me Python, and then the next step is to teach me TensorFlow within it, are really my ultimate goals. It's just in an interesting problem to work on. Okay. Well, thank you. If there's no other questions, we'll just open it up to the floor.
No, I do appreciate it. I like this.
Hey, thanks a lot, Alan.
so my question was the one about the things that you might have learned while you were doing this. You know, that's why I was bringing up the interesting edge cases, like the subtleties in the definitions that you discovered during your work. And I, for example, stock quote at open and close versus after hours trading. You said that, you know, there were some interesting things when different markets open was part of your response, but I was hoping you could expand on that.
Okay, well, I can go back to, let me go back to sharing if that's all right. I'll go back to where we were, because yeah, I pay attention to that. All right, and if we zoom in back to the day level, let's go back to, I like 15 minutes. It's not too, it's, you know, the Goldilocks. And so I'll notice that what's going on right now, I can tell you, this Zoom has messed me up. I'm sorry, I don't know how, what can I do to zoom in? There's normally a little plus button, and I'm not finding access to it, so I'll just have to shift to 1 minute data. What's going on is you're getting competing PSARs, and it's basically like it funnels the cattle into the chute. And as it gets closer and closer, the data gets closer and closer, and it basically squeezes it. The data is going to stay right between, and you don't have any clue as to which way it's going to go. It's sort of an equal 50-50 above or below, which is the crapshoot that is the stock market, right? But you can see that they left it. It was just beginning to tank here. Well, that's going to allow the 3 a.m. crew to pick this up and do something with it. Basically, you can sense that the market is a little bit down. And the other thing I see is this arc right here tells me, well, there's a big fight. There's this group that the bulls were all happy here and the bears were happy here, but you're getting this arc. Other times it'll basically do an up, and then you get these trailing ones where each one of these, when it impacts, is going to go up. And what we have, though, is we have an overarching one that has yet to complete, and it started back here. This is the 4-hour PSAR, and it is still going. These other PSAR spikes did not beat it, and so that tells me we're still headed down, even though we've got these things here. My prediction is that tomorrow is going to be another down day for Tesla. But if you go back, here is the various positive ones, and it did complete. Now how can I back out? It is. I may just have to stop and redo my screen to the higher res, because then ThinkOrSwim gives me all sorts of extra buttons here. You were asking about the boundaries, though. What'll happen? Here's the 3 a.m. boundary right here. So this is 1900 hours, 7 p.m. And then the 3 a.m. crew can get in until 6 a.m. Only the industrial traders have access right here. And they'll throw us curveballs at times. And then we tend to react. The 6 a.m. crew tends to pick that up and run with it. But then they'll set stuff up that then the 8:30 crowd takes and just really runs with. But you'll see it set up here. The other thing is like this. these are fascinating trades. It's a single trade, and somebody had to basically do a market trade. And so basically somebody offered like 20 points below the market, and somebody did a market trade and lost their shirt. They could have sold it up here, and instead they sold it down here. And this guy was happy, and he could turn around and make an instant profit on it. But it creates an interesting ripple in the PSAR data that I see the data actually respond to, which tells me that this could be a manipulation technique, that they are willing to lose this much money to then profit from the results later. This is me conspiracy theorying, but I see this on a regular basis at 7 minutes after the close of the, either 7 minutes or 14 minutes after, there's a suspicious transaction that will happen after the close, and then sometimes 30 minutes before the open will be another suspicious spike. It just stands out like a sore thumb. And here's one right here and here. Here's another pair right here and here. And I have called up TD Ameritrade, and I have confirmed this is not errors in their data. This is a legitimate transaction. See, look at this volume on this one right here. This was, I'm sorry, my data is missing over here. I wonder if I can window it. Maybe that's what's going on. Hey, there's the problem. I was not windowed. Now I've got my buttons. All right. So here's our dollar amounts over here. And so this went from 749 down to 729, a 20-point drop, which is typically, and it's often to the dollar, $20. But sometimes it's sort of premeditated. You can see that they put it just right at where the PSAR is, so it didn't block it. And but it blocks some other ones right here that will cause the trigger in it. So those are some of my suspicious edge cases. But again, you'll see stuff at 3 a.m., 8:30 a.m., the behavior changes. Noon, it changes. 3 p.m., it changes. And again, back to 7 p.m., which is the end of the day. And you don't see any data then until the 3 a.m. crowd kicks in right here. But look at this, right? We were coming, this is the situation where it's horizontal, leaving things. It says whoever comes next, you're going to make the decision as to what happens. And they did, and whew, like this. And these guys have no control over it, right? By the time the market starts, it's already another 10 or 15 points higher. And then that sets up a mood that then the main crowd followed that mood. They can react negatively to it as well. But tell you what, that moment at 695 when the S&P inclusion happened and it dropped 50 points in 2 minutes, and then it gained 70 points in 2 minutes, I was in on that. And it felt like I was at a cliff and a dragon came along and pushed me off the cliff, and I free fell, and he came and grabbed me and swooped me and set me right back where I started. And I was like, holy crap. You know, part of it was I believe in the company, and that's why I didn't sell. I didn't panic sell. But oh my Lord, I just saw tens of thousands of dollars going past, and then it came right back. And so, yeah. It is what it is.
Thanks for sharing your experience.
For those anomalous transactions, did those have much volume?
Yes, at times. Yes. Okay, I meant to show that. I can't. Can I zoom in? How can I zoom? Right. Change over here. There we go. I'll change my mode from dragging to zooming in. So I look right in here, and you'll see the. Now where's, oh, it shifted to volume, but here's the volume. It's way above the rest of them. And so it's, that one is, this one is not, this one's a normal trade. This one was a significant trade. It makes me wonder if it's the insider traders that have made an agreed upon deal, and they'll trade this high volume of shares at the agreed upon price, which was a good deal for whoever got it. You know, if they pre-agreed upon it, so if it happened a long time ago, it looks like a bad deal for this guy, but it may have actually been a good deal for him. And then it looks like a good, you know, so that may be what's going on. You have to go, I hear that the insider trader stuff has to be published. And so if you could go track that public information and find out if this is it, then that would answer the question of what are these things, if I'm right. But otherwise it's some strange, but it has an effect. I see the after effects. It's like somebody drops a pebble in the water, and then you watch the rubber ducks bobble on the surface later from the after effects. So It's so nice to have all my controls back. I had a partial window, was why I couldn't see all my stuff. So.
Alan, back to the Python.
Yes.
What do you want to use TensorFlow for?
Okay. Are you familiar with GAN's generational adversarial networks?
Yeah, GANs.
Right? So for folks that aren't, it's the kind of stuff that it'll train on puppy dog faces, and then it'll generate Starry Night in puppy dog faces. And basically, to my understanding, it is if you take radar detectors and radars and you have them compete against each other, they get better over time. And basically, you have the one that I saw that helped me understand it is you have Google Maps, you have a satellite image and a Google map, and it will predict it'll fabricate a satellite image from the lesser Google map information. And so you have one that is the generative, and of course it's just scrambled gray stuff to begin with as it starts. Then you have the other that grades between, it's looking at the actual satellite image and the fabricated gray stuff, and it grades it. Its job is to determine which is the truth and which is false. And it's random to begin with, but over time they both get better. And so it's rewarding the generator for getting closer and closer and closer to looking like the satellite image. And then over time, in theory, when you presented enough of that stuff, you can take any given any given Google map and predict what the satellite image is going to look like to some decent degree. Well, if you could imagine taking the inputs of the information you know, and the PSARs, et cetera, and then you predict what the next stock values are going to be. That is a thing that you could do, is predict which way it's going to go, which is your key thing. Do you want to get in or get out based on the thing that's so hard to know, which is, I know it's going to go to here and I know it's going to change, but is it going to, if it goes up, I know what it's going to look like. If it goes down, I know what it's going to look like, but it could do either, and I don't know which. And so my theory is that by looking at the prior PSARs as historical basis, then it could know what direction it's going to go. But I've got to do that and find out. So anyway, that's where I'm headed with. There are various things on how to use TensorFlow in stock trading. There, obviously lots of it is being done. But that's my approach that I'm going to give a whirl and see how it goes.
Before you go, the GANs thing it's complicated to actually train once you do it. But the question is, what is the GANs network is like a counterfeiter on one side and then the detective on the other side, and they're competing against each other. This is basically the idea between them. And both of them are two neural networks working against each other, but basically they're trying to, this is how you kind of figure out what the function was. The question is, who's the detective here and who's the counterfeiter in your example? This is what I don't get.
Okay. So the predictor is going to predict stock trading and the next stock value, and the grader becomes invisible once you get it working. You can take the grader away, but I think the grader basically shows confidence. How confident are you that it's going to go up or down? Right? That grader is confident that it is similar to values that it's seen before, or it is not confident that it is similar to values that it has seen before. So these are some examples of using GANs to produce. I think the one that's on the right is what is produced from the thing that is on the left. What does it say?
Yeah, I would start with something much, much simpler than the GANs.
Yes, I plan to. I do plan to.
Okay.
What I'm going to do is just simply, it's like Hello World. Somebody gives you sample data and TensorFlow, and you go do it, and then you begin to add your own input in the process. So here's an input, and here's the ground truth, and then here are the GANs as to what they produce as an estimate. Right. So here's the actual photo, but they can generate something that looks pretty similar from this. And so this is how deep fraud, what was the word? Deep fake. right, is done, you can train on, Donald Trump, and then you can actually act things out and have an image that looks like Donald Trump, and it can even sound like Donald Trump if it's trained on his voice, right, is how this deep fake stuff works. So it's scary, but it's obviously good to know what's going on in the world. And we get back into the ethics topic. I have seen, I'm very interested in this TTM squeeze. I find it very beneficial, which what I have is a bit overloaded. Oh, but by the way, here we go. Finally is my ability. Here's the lock I was talking about, right? And it's not active right now, but if I had it unlocked, you'd be seeing this price changing to whatever is the current bid value, or it'd be ask. And if I'm trying to buy, then it would be the ask value. So anyway, that's that. And then the other key thing you got to do is if you're in extended hours, you've got to go trade it, shift it to extended. If you make that mistake and you try and do a day trade in extended hours, it's just going to sit there and look at you. And so you have to cancel and retrade. Okay, ask your question again. I'm sorry. Oh, more generically. My friend Paul had about 18 models, and each model was unique to that stock, which I think is probably a good plan. I think that Tesla traders can behave differently than LAC traders, that can trade differently than QQQ traders. Some of it may carry across, but I think if you had 3 models on each, they'd probably share that thing in common, but you'd still need the particular personality type that trades that particular stock. So his ability, he can mass generate tens of thousands of models in high speed, and so he has them compete, and whichever one wins is the one he goes with. So yeah, he automated the process of building models, and so where he used to have to do it by hand in the 90s, he automated it and therefore could generate tens of thousands of models instead of 7 or 20, right? Okay.
I do disease models. In my models, people die, don't make money. Maybe it's a bad idea.
This was a screenshot I took that shows, the repeating pattern that makes it a little bit more obvious to see. And the question is, are other stock traders responding to this to cause it, or is it truly identifying human behavior? I'm inclined to think it's more the former. I think that since this has been around since 1978, I think a lot of the major movers are using it, and it's a self-fulfilling prophecy. But anyway, here's an example of, I just hand drew the basic pattern that I see, which is that whatever the defining upper PSAR is, whatever the next closest is, you want to bet this thing right here. You can count on the fact that this is going to close right here, unless it doesn't. And so that's what's going on right now is on the downtrend, this is staying constant, and there are many birds inside of it. And but anyway, within it, the parent and the inner one, there's often this connection point between it. So. Okay, well, that's, if anybody wants to reach me, you can reach me on LinkedIn. And any other questions? Are we good?
Yeah, that was pretty good.